What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily content as well at Hemi137 on X. And I do provide periodic, recent or current events here on this channel as well. So before we get started, let's go ahead and drop a like and let's get right into it. So leading into this past week, we've essentially already reported a lot of the major earnings. And so what we're really looking at is just some other ones that can kind of give us a pulse of the market and what's really going on. And ultimately, we are steering towards NVIDIA earnings and kind of where they stand, as they've essentially driven up this whole rally that we've seen over the past year, and that's essentially what's sustaining the current highs in which we are in. So if you even look at NVIDIA, it's had a massive monster move over the past year. And it's been quite an interesting ride. Like I've talked about before, infrastructure and AI have pretty much led that charge, and we will see essentially the fruit of that labor, I think, and potentially next year. So this year is really the year to be buying the AI, all the open AI companies that people were hyped about this year that are kind of seeing that it's not really paying out this year. And I think we'll kind of see that, but I think there'll be an uptick in actually performance and use cases. Use cases is a really important aspect of AI. Is a lot of people don't really know how to use AI. And it was a big eye opener when we had Chat GPT, but ultimately understand that's why I like Palantir so much, because it has an actual use case for using AI, and a lot of these companies don't really have a specific use case. Sometimes the ones I talk about, like PayPal as well, and Amazon, are starting to use AI to help with sales, and that does help quite a bit. But with that being said, this past week, again, we're getting a lot of good information. Like I said, earnings, I think we got in about another 2 more weeks before earnings, before we get the NVIDIA earnings. And then from that point, we're pretty much waiting to that March deadline, in my opinion. I think once we look at that Fed funds rate on March 11th, if that does not get delayed, I think that's going to cause a lot of major hiccups. And then again, just to remind you that around that time is the normal cycle in which we sell off heavily for the year. It's typically around this time, and also typically around that October time frame. So we will continue to watch and see what happens. So the next coming weeks could be quite critical, as we are still seeing a lot of good information about the current state of the market currently occurring. And again, I think after the next 2 or 3 weeks, you're probably going to get a real dry spell where things are going to kind of just either one goes sour really fast after that March 11th deadline, or things are just going to be really quiet, and the market may just essentially chop for a while, like it did quite a bit last year. So with that being said, let's look into this past week. This past week, we had some good earnings. We had PayPal earnings. Now, something about PayPal is they are like, if you want to look at their numbers are still very good. Again, you have to remind yourself that the new CEO that just came in, he's only been in there for about 6 months, and he's done a lot. Yes, he's also laid off a lot of people as well. So not only did he shock the world with the AI updates that he was including, which I was very impressed with, but not only that, and they have a huge user base, like massive user base, and they're making it very, very easy to make sales. And if you know anything about making sales online, you want to remove clicks. You don't want people wondering, because if people get annoyed, they're just not going to buy it. So again, I like their approach very much so. And their books are still looking very good. They're turning everything around from where they were. So I give them another quarter or two, and I think they will be very explosive from that end. Again, remember, if we can price in a recession between now and June, I think we could have a massive bull run in the market at that point. We need to price in, we need normalization. So we need something major to occur, and we're seeing a lot of layoffs. So I don't know if that would be the thing. I know the Fed have been talking about they're keeping an eye on essentially employment numbers as being a consideration where they might actually start cutting. Powell's saying 3. You can't really go off of any of the other estimates. They've always been wrong. The market kind of moves off the estimates, but ultimately, the truth is Powell's aiming for 3. So I am expecting that when we get an emergency rate cut, he'll probably do about 3 different rate cuts pretty close together to kind of slow it down. And then I don't think he's going to go all the way back down. I know a lot of people would like him to go all the way back down. I don't believe that is going to happen because your concern is inflation on the back half of that. So we'll see what happens there. But so long story short, PayPal did good, even though it started selling off. I'm still liking PayPal a lot, especially going into probably Q3, Q4 this year, and definitely in 2025. Affirm is growing at a rapid pace. They're doing very well. The buy now, pay later model is doing well for them, but they're trying to build out other products like your savings and checkings account, stuff like that, but they are doing very well. Their forward guidance isn't doing well because of the fact that buy now and pay later, people are realizing, well, hey, I got to pay it back, and there's going to be a lot more delinquencies. So with that being said, um, they had a good run up towards earnings, and then like I said, they missed on some aspects. They're still trying to turn their business model around. It's still fintech companies. So again, hit or miss. I think if you want to play a good gamble stock, again, when I talk about a gamble stock, I think the potential may be there, but I think there's just too much risk on the table. I think Affirm could be one of those. But again, you have someone like PayPal that's much more established, much more a broader, bigger user base. And so I do like PayPal more over Affirm. So we will continue to watch, but it's always a good one to mention to kind of see where everything was at. So it was interesting to see they put up some remarkable numbers because of they're associated with Shopify and Amazon as well. So, but sales are declining. So, and again, the forward outlook is looking very bleak. So that was a good one to mention. I just kind of see where everything was at. Now, Cat actually did fairly decent this time around, but again, their forward outlook is not looking too hot. And something we're kind of seeing is there's just been a lot of construction that's randomly been built, and then it's just not being finished. So something we've kind of seen in China, where they've started creating whole cities this way, and then they are abandoned because people just can't afford it, and so they're left. The projects are left abandoned, and we're seeing that with a lot of housing developments out there as well. So again, a lot of the forwarding guidance, even from Affirm and Cat, were not good. And very bleak on what they could be expecting here for this Q2 run up that we're coming in, was essentially again there's a lot of event driven big events currently going on in the start of around towards the end of that Q2 that people are really concerned about. Again, really that's normally a pretty heavy sell off just towards the end of this Q1, getting ready to essentially report Q1 earnings. So we will continue to watch and see there. But again, things just aren't looking good, especially if you're not AI. Something I've said, if you're not AI infrastructure, if you're not cloud or chips, you're really hurting really bad right now, or have some portion of your business supporting that right now. You are in some big trouble. And maybe you are building out the AI infrastructure and have some great use case for your business using AI and could be very profitable, which are companies you definitely want to be looking at this year going into 2025. So we'll continue to watch that. So this past week, we had Cisco laying up to 10,000 employees. You had Fuller laying off some 3,500 employees. Boeing's workers. So let me finish off the layoffs here. So this is what is concerning, and something I know I have these kind of all shuffled around here, but one thing we gathered from the last non-farms last week is that they've essentially redefined what a full work week is. So now they're reducing it down to 31 hours, which essentially blew up this crazy jobs report that we got out of nowhere. So we wanted to start watching the revisions on that and seeing what's actually taking place. And this is what is upsetting a lot of people, because they're talking about we are in this such a strong economy, when it's not true, that everything is pencil whipped. I don't just come on here to say these things, but that's actually what's going on. Is that there's a lot of they're seeing all these massive layoffs, and yet they're reporting crazy numbers. But what they don't tell you is that these numbers are being refined into 31-hour work weeks, so that essentially the people that they're getting their hours reduced, but their pay is getting increased, and is still not covering costs. So people still have to work two to three different jobs, and that's not being what's reported. All you hear is about these great job numbers and everything's fine and dandy, but that's not the case, right? And so you can't. What we're leading up to is a hard landing, is what I'm trying to say. We've never achieved a soft landing, and this time won't be any different. Yes, I do believe AI will get us out of here and make us way more productive in the future. But again, you're still just building out that infrastructure. You won't even see the fruits of that labor till next year, and that will just be the beginning of it. And it's still going to take years to build these models. It's because it takes a long time to build the infrastructure, which is very expensive to build the models, these AI models that can actually do something useful, or having a use case to be able to use that for. So with that being said, again, we're continuing to see massive layoffs. Tesla was even brought up this past week, saying that they are kind of um, putting their feelers out there for potential layoffs themselves, which is quite interesting. Elon's done a very good job about kind of reducing cost on a lot of different things, and so now it looks like he's starting to cut more for the employees. So that'll be interesting to watch to see if that is announced here soon. You also have Boeing workers demanding a 40% pay raise. And this is what we talk about all the time. We just saw this with UPS. You don't want to have to demand a pay increase. Yes, it makes sense, but the company cannot be profitable. So if it gets to that point to where it's approved to get these high pay raises, there's going to be massive layoffs. That's what you're going to see coming out of Boeing. And then from that point, what's going to happen is that, sure, you can get paid, maybe $10-20 more, but what's going to happen is the workforce is going to get laid off, and you're going to have to do 10 times the amount of work. And so this is what is extremely hard and something hard to deal with. This is why we need a hard reset. This is why these scenarios, these cycles, they always exist. And we've gone a decade to where, everything was just free money. And we think that that's the way it always is. In the case that it's not that way. And that, every century, dating back to the Great Depression, we are in that same scenario where you have a massive, massive correction every century. And we've kind of delayed that over the past, 2 decades to try to get it to where we're currently at. With the great financial crisis, and then what happened during the pandemic. And then now we've been kind of kicking this can down the road, and we're getting to that point to where you're seeing the money printing machine going extremely haywire. We're starting to weaponize the dollar, which is actually harming us by doing that, and essentially forcing a potential CBDC, which essentially they can stop any kind of payment. Not that they couldn't do that now, but they would have more control over where your money is actually going and being spent on. And so they get another additional layer of control, which is scary to a lot of people and should be alarming. But with that being said, a lot of U.S. workers are getting scooped up by international companies hiring remote. And this is what we've seen is because of the pandemic, people like working remote. They don't want to have to pay the extra expense to have to drive in, sit in 2 hours of traffic or anything like that. So people are taking whatever remote jobs they can get. And the international side of the house is willing to do that. And so now you're losing a lot of employees that way as well. And so this is, again, what's concerning is you're losing a lot of full-time work and you're getting a lot of part-time work, which it can't keep you afloat, right? You lose benefits by being part-time because you don't work enough hours. And so there's a lot of different problems that are occurring there. So With that being said, what we're seeing is credit card delinquencies surge more than 50% in 2023 to $17.5 trillion. So not only is the government spending like crazy, people are going in debt like crazy, and not willfully. A lot of them, vast majority, and this is why, to do um, some research is to go on social platforms and see what people are saying, and look at videos. There's been a lot of videos I've seen out there about people complaining about prices, and then going in the comments and reading the comments about people and how they're struggling. This is where you get the real, like, base level where people are at. So don't be listening to headline news. Go on social media and read comments about things like this. You'll see really where the pulse of the market is. People are in a very, very bad state. And so this is why you see these delinquencies and stuff like that. And this is something else that's the problem, is we've seen a huge increase in delinquencies, and this increase in insurance. And understand that your credit score plays huge into your insurance, right? This is something I just learned over the past week, is that because if you have a bad credit score, you will pay more on insurance. So it doesn't matter if you're a good driver. If you can't pay your bills, you're going to have to pay more in insurance costs. And so all these delinquencies that are coming in are forcing people to have to pay more on insurance. And so, whether that's for your home, for your car, all right, you get an insurance for personal insurance, for healthcare, right? All these things start going up, and people are paying more. Some people are forced to pay more on insurance um, for their home than their actual mortgage, which is getting absurd and forcing people to have to sell their homes. And so, with that being said, it's causing a big, big problem. So, with that being said, we also had New York Community Bank Corp. They've taken on a lot of debt from essentially the I can't remember the name of the bank, the one of the banks that just went down. But one of the banks that just folded under, they took a lot of their corporate loans, and essentially it's a lot of bad debt, and then now it's actually sinking them down. And now you actually have Yellen come out and decline to comment on it, and she's actually made a couple different comments about how things are getting bad after essentially all last year. You heard her essentially say that we were strong and resilient, and everything was okay. We defeated inflation, and we have achieved a soft landing. And then now it's just she's kind of walking back some of those comments, which is funny to say. She's actually been kind of trying to force the hand on some kind of crypto regulation as well, as they are trying to get more funds ultimately. So again, very interesting what's going on. Again, there's a lot of misleading stuff when it comes to just things in general. So, with that being said, that was just this past week. Upcoming events this week, we have core CPI, which is going to be important. Again, I expect a little bit more of an uptick. I don't expect anything big. Again, if it jumps a lot, that could really scare the markets, because the demand's not coming down. That means higher for longer, or potentially even rate increases, which would be scary. And could potentially happen. Something we need to be discussing or keep in mind if we do start to cut rates. If that demand comes in, that core CPI after we start cutting rates, the couple after that are going to be extremely important, and something we're going to have to shift focus back to core, because if we cut rates and inflation starts to run, we're going to have to put rates right where they're at, or potentially even higher where they're at, which again could lead to some very, very bad issues in the near future here. So with that being said, we also have a core PPI. Again, this is something that Feds say they look at. In my opinion, it really doesn't do much to the market. People really just watch the core. The market really moves just off the core. And again, headline news, and then the projections that they have. So again, we'll continue to watch and see what happens. But again, none of the analysis out there, they're always wrong on a lot of different things. This is why I created my channel, was to try to shift through this stuff, and again, trying to take advantage of the pumps and the dumps, and this is where risk management comes in. So you have an idea what's currently going on, how much risk to apply when you have a special events coming on. whether you should be playing options or equities, or playing any other typical scenario like that. So, and just be mindful to reduce risk when you have big events coming up. So with that being said, we do our next monetary policy is until March 20th. March is going to be a big month. We have monetary policy, which again is being reduced. It keeps being reduced to getting a rate cut. I don't really think there's going to be a rate cut, like I said, unless it's an emergency rate cut. And then you got the Fed's funds rate on the March 11th, which is going to be important. Like our next core is this week, and then our next one will be in March. So we have March 11th. 11th for banks, 12th for core, and then 20th for monetary policy. So March, the mid of March, is going to be a lot of big important events currently going on that are scheduled. So we'll have to see how that goes. Upcoming earnings this week. Again, earnings are continuing to go all through the next 2 months, but again, the impact of them are fastly diminishing. They will give us a good idea what's currently going on. But ultimately understand that the market's already kind of made up its decision. It just needs NVIDIA earnings, and then it's pretty much done from that point until the next earnings cycle. So, but this week there's still some good ones like We got Shopify on Tuesday is a big day. There's a lot of them. There was quite a few I actually wanted to list on Tuesday, because Tuesday had a lot of them that I really wanted to see. Actually, Snap shouldn't be on here. They actually reported this past week and did horribly bad. But Shop is a big one I'm watching there. I want to see how that does on Tuesday. Airbnb be interesting to watch to see. Again, a lot of people are starting to kick Airbnb at our local areas, so I want to see what their numbers are looking like. And then we also have Upstart, which again is a AI driven like payment system and loans. They do like banking kind of stuff. So it'll be really interesting to watch how Upstart does coming into this week. There's a lot of hype around that. I do like that as another like gamble play. I talked about a firm. I think Upstart could be another good gamble play. Again, AI driven. I think this next run is going to be on AI. I think it will continue to play out, but you actually, like I've talked about, you'll see the fruits of that labor here in the next couple months. So it'll be interesting to watch that. And then John Deere, again, another pulse of the market. Cat did well, but again, forward guidance is looking bleak. And so when you're looking at companies like John Deere, you really want to look at the forward guidance and see where things are at. So you'll watch closely with that. This week for the index, again, it's not a big, horrible, terrible move this week. Again, the market's really not expecting much from core. Again, I expect a little bit more inflation, but not really a lot. Again, if that changes dramatically, that can dramatically flip the switch on things very quickly. So we'll continue to watch that. Tesla is up a little bit this week. Again, if there's bad inflation, Tesla will probably sell off a lot. Big tech will still start selling off a lot if there's a massive jump in inflation. So keep that in mind. Boeing's about the same, and essentially JPM is about the same. So with that being said, let's go ahead and dig into some charts this week. I have a firm up here, but let's jump over to SPX. So SPX all-time highs over 5K. Again, this move has started all back since we paused here back in, I guess it was November. No, just in the end of October, we officially paused. And something I said, once we officially pause, the market will rip up on that information until we get our first cut. Then we price in a recession. And then we're going to have to see where we land from that point. So again, take advantage of this. I've been trying to take advantage of this on some of these pumps here on stocks that have been selling off. And I suggest that you do that, but with risk, and be mindful not to be buying tops like NVIDIA already, gone up a ton. To be buying that top, I think right now is a little silly in my opinion. Again, none of this is financial advice, but we're going to have to see. So again, we're still in price discovery mode, creating new highs. You really can't mark anything on a high side. But what we've established is essentially there's a pretty hard support here, or big support here, roughly around that 5K mark, or roughly around this 49.60 mark is where your support is at. So again, if that breaks, Again, none of these haven't really been retested. There's a little bit stronger support here at the 47.71, kind of watching that there. And then your other support is roughly around here, around that 4,600. Ultimately, again, if we're going to start selling off pricing in a recession, if we start to sell, I'm aiming at the 4,100 is really my ideal mark. If we can break that, we may not. As you can see, we hit that low. That low was actually quite a ways back. Yeah, so we hit the 35 was the low point. That's when tech had essentially absolutely obliterated when we hit that mark down there. So we'll continue to watch and see, but we do have all-time high. We'll see what happens here, and then we'll correct it. Even like here was a pretty big correction, but again they officially paused it before this broke, because if they didn't pause it at that point, I think it would have came all the way down in even a worse fashion. So, but the fact that we have only had one red candle, these are weekly candles. The fact we've had one little pullback on this whole run up is concerning, because that's not a strong bull structure. That's more so let's just pump up the market, and then we'll see what happens. So again, Fibonacci retracements, even if you go from this low, this is why I don't really do Fibonacci retracements too much, because a lot of times what happens is these zones already kind of capture that, and so you're kind of really looking, fair value is roughly around this area here, roughly around the 4,400 mark. Expecting a pullback to there. So for the March, I'm hoping we can at least get a 4,400. Again, if it's a cut at that point, we don't know. It could start selling off even heavier. It just all depends on the momentum. It depends on what kind of fear is driving the market. So just keep that in mind. So we'll continue to watch and see what happens here. But that 4,400 would be a good price for the market to pull back. That means essentially the Mag 6 would have to pull back a lot for that to happen, as they're pretty much propping up the market. But we will continue to watch and see what happens there. Bitcoin is starting to make another massive push here. So it's trying to push back up to the 50K mark. It got rejected the first time. Again, if it keeps getting rejected at this 50 mark, that could be a concern. Something, again, you always want to be watching is this zone here, this 4,800 zone. You can get wicks up to the 50K. That's not a big deal, but these daily candles, if it continues to keep closing below the 50, that's going to be a problem. It hasn't reached a higher high yet. It's very close to. I wouldn't be surprised if it did hit it, but if it hits this and wicks back into this zone, that's concerning. It may just play this zone here until it gets the price in of a recession, and then potentially corrects again. Buy on these zones, especially on this dip. I've said that for a while, that if we do have any kind of pullbacks, you want to be buying. Again, not financial advice, but you have to be patient for the big bull market. I know I've talked about a lot of times for this that what you want to be looking for is on these pullbacks, or this is the pullback to buy, but ultimately understand that I talked about the spot Bitcoin ETF, and people are like, oh, it's just going to go parabolic as soon as it happens. Yes, there's tons of money flooding in, but the thing you have to understand is, even when you look at gold in the spot ETF that was approved there, it took years. It took like 5 to 6 years, but in that 6-year span, you had about a 600% increase in gold. And so I expect the same thing with Bitcoin, but again, you have to be patient. And I know there's a lot of people that are in all sorts of markets, not primarily in crypto, that just expect things to go parabolic right away. And that's not the case. You have to understand that it takes time, but it will. It will be more mainstream, I think, in this next bull run after the Bitcoin halving, which I believe is around the 14th, somewhere around there of April. So we're just about 2 months out for that. So expect one, and essentially before any Bitcoin halving, there's always been some major selling as well too. So why March, I think, is so critical, because there's just too many coincidences of big scheduled events around March for that to happen. And again, it's a normal pullback time of year. So I'm really watching and paying attention. If it doesn't happen, then again, you're still walking on A shells, just risk management. Buy stuff that's already been sold off a lot. Don't buy stuff at peaks. I think it's not the great idea. I don't buy stuff at peaks anyway. But nonetheless, you want to make sure, once again, all earnings report, we should get that 3 to 4 weeks of just kind of selling off. And then from that point, go buy the dips on the ones you really want and hold them for a couple months. And that's the way essentially I trade a majority of what I do as well. So now Tesla is finally kind of starting. It's ever since earnings, it's kind of just really held this 180 mark, which has been pretty good. We're finally starting to get that retest. Now, I don't really like using these EMAs too much, but one thing is if you get this huge gap, essentially that first retest of this, you get a hard rejection. It could lead to some more selling. So this week, I'm really kind of looking at that 200 level. If Tesla can't break 200, I expect a hard reject me that first day. If it can't reclaim that within a day or two or a couple days, and get back over that after being hardly rejected hard off of there, this thing could start heading lower and then start aiming for that 160 mark. Again, I really think that's a stronger support. Now, will it go lower than that? Again, it really just depends on momentum and what the narrative is. If we get a bunch of onslaught of bad news going on, you could get a pretty heavy market correction, which would mean Tesla could sell off a little bit more. So, again, we'll continue to watch here and see what's going on. Again, I do really like Tesla going into this next one. Again, it's not so much about the EVs. The EV sector, I think, in the brightness and all that was going on with that is that fire is diminishing rapidly. But my thing is Optimus and AI with Tesla is going to be a huge market, and they've got a long couple years ahead of everybody else, and that's what I'm betting on. I'm not betting on the car company that they are now. If Elon decided to take away AI and Optimus away from it, and that's not even including full self-driving and robo taxis or anything like that. And also understand, again, their energy business has been doing extremely well, very impressive as well. So those particular things, right? They're not even, everybody's only looking at the EV part of it. All right. So everything else that Tesla has been doing, as long as I think that Optimus side of it and AI can stay with Tesla, I think this thing will vast surpass many things that expectations that a lot of people have about Tesla. That's where I am aiming on, where I'm betting at. So we'll continue to watch that. But these are the levels I'm watching currently right now. But we'll see what happens there. Palantir had a absolutely great earnings, skyrocketed. Continue to watch this one. We'll see how high this one could get. I'm kind of watching that 30 mark. The 30 mark is really kind of the ceiling for me right now. I'm kind of waiting for this thing to pull back and see what we can get. But I would like to get more heavily invested in this company. I'm not quite as much as an investor as I want to be in this company, so I'll wait to watch to see if this thing pulls back even more, especially if we could price in a recession. I don't know if we'll see the single digits again. You can always be surprised, but I definitely want to be keeping an eye on this one on the next pullback. So again, it just reported, so give it about a week or two, let it pump, and then at that point you start to get some selling off. Like I said, every time you get earnings, you get a nice pump, and then a couple of days later you get a sell-off consolidation, which it consolidated nicely again around the 14 for a while. Then it had earnings and pumped up, and then kind of just it's holding off, but it's being consistently profitable. And again, it has one of the best use cases for AI. So I want to keep this one in the pipeline.